The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
TFNN, welcome to the March 15th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right, when you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence, but more importantly, I am here to serve you. So feel free to pick up that phone, dial on in, ping me inside the den. Would be happy to hear from you so that we can add a few sets of eyes. Yeah, I've got more than two. Or more than one set, but I've got eyes in the back of my head as well. So we'll add all those sets, take a look at whatever chart it is, whatever time frame it is that you're trading, try to figure out what the markets are communicating to you and I. You can do that, of course, by calling 877-927-6648 and internationally 727-445-1044. So let's get this. What could be a turnaround Tuesday edition of today's Trader's Edge. So let's get this thing kicked off. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 27 points, trading out at 17,201. S&P is off 10 points, trading at 2,009. NASDAQ Composite down 30 points at 47.20. Russell's off 16 points, trading at 10.67. Gold's back 13 bucks. Silver's back 24 cents. Light sweet crude back 91 pennies right now, trading out at 37.93. To the upside, leading the charge dollar-wise, individual, stock-wise, Mead Johnson Nutrition up 10%, 7.5 bucks. Cellator Pharmaceuticals up, 361%. They clearly have cured something or a buyout going on there. Priceline is up $7. InOgen, maybe that's how you pronounce it. It's up 15%, up $5. INGN is the ticker symbol out there. Children's Place, PLCE. It's got a place in my heart. I don't know if it does or not, but it's up 7%. It's up $5. Penumbra, that's up about 10%, near $4. AutoZone is up $4 as well. To the downside, Valiant Pharmaceuticals getting crushed again. How about that equity? What was it, like up at around the 160, 260 level? I think it was around 160 or so back in August. Now trading out at 31 bucks. Chipotle down $15. That's off 3%. Credit Acceptance Corp down 6%, down 12 bucks. So many. IBB is off about 3.3%. So many of the equities with inside the biotech sector, the IBB trading the downside, Allergan, Jazz Pharmaceuticals, Regeneron, just the whole slew out there. But let's go take a look at, so got a question in the den. Let's do that first because otherwise I'm liable to forget. Then we'll go figure out what's going on inside the markets out here. Relatively stable, but trying to crack the tender underbelly of the bulls out there. But let's take a look at the question was, would I buy Mosaic? MOS is the ticker symbol. Would I buy it right here, right now? And the answer to that question is, well, I don't know. Let's go figure out what the answer to that question is. So let me add the volume pattern inside this stock out here. So we've got the volume. Let me add one more thing if I can find it. Can I find it? Can I find it? Yeah, I can. It's right there. Okay. Now let's take a look at what Mosaic did as it was forming the bottom, right? That's the first important thing. Was it forming a significant bottom? Now, to do that, I'm going to go ahead and put this chart up on the screen. And we can see that these black lines, by the way, going from upper left down to lower right out here, we can see that price had been moving lower, doing it with less relative weakness out there. And when it did form a bottom out here, the cavalry showed up. They always show up, whether it's to the bullish side or the bearish side out here. To the bullish side, cavalry showed up, put in that bottom a nice little bullish engulfing candle that was back on January 28th, 2016. Now, what you have out here as we speak right now, we've got an A to B equals CD. I'm going to go ahead and do that on this chart right here. It's going to be maybe a little bit easier for me to draw that in. So your A point, I believe that was down here on January 28th. That's your A point. Your B point out here back on the trading day of February 11th makes a retracement almost back to the lows back on February 16th. So you've got your A to B equals CD pattern that has completed. Remember, the cavalry always shows up around these patterns. We can see that resistance is truly right up here in the trading session of March the 7th. Why do I say that that's resistance? Well, just take a look at how over the past couple of days here, we have seen, when I say the past couple of days, I'm referring to the trading day of March 8th and the trading day of March 10th out here. We've got a nice little bear sash, dark cloud cover with some follow through on the March 11th. So that says at that level out here at the high on March 7th, 3110 is a significant level of resistance that this equity needs to get through. Now, there's nothing really bearish when I use bearish reversal candles or things of that nomenclature, especially when we're taking a look at a chart here. It's just to identify levels of resistance. A little different story when you have patterns are completing. In this case here, we've got the A to B equals CD, but the larger pattern here with regard to price moving lower, doing it with less relative weakness out here, that's a more important pattern when I take a look at that stock chart quickly. So what should one do? If this stock is really bullish out here, this is Mosaic, what you should be taking a look at, and I would add the price, the first potential buy price out here would be at 28.60. 28.60. You are 28.58 right now. 28.60. So the question is, and you don't have to buy it today, this is for Pete D in the den, but 28.60 is the number that I would be looking at. Now at 28.60, if it holds that level and you're not inside this equity, you could go ahead and dip your toe in there. That would be the first place. Ideally, though, price will actually pull back to about the level of 26.26 out here. So if you're really looking to get in on this equity, what I would do is I would go ahead and build a position here. So I would, maybe put in 1/3 of the position. If it holds this 28, what did I say? It was 28.61 to be exact right now. If it closes below 28.61, the message that it would be providing to you is that price ought to fall back into that 26.26 level out there. That's what the daily chart is showing. Let's take a quick peek out here of Mosaic on a weekly time frame, see what we have out here in the case of Mosaic. In the case of Mosaic on a weekly basis, you had what? Anything that really sticks out at us? Not really. Nothing that really sticks out at me as we speak. So I think that's what you go with on the daily chart for Mosaic. That was for Pete D inside our Tiger's Den. Now, let's go check out what the markets are doing out here. Dow's off 26 points. You've got the S&P down 10. You've got NASDAQ Composite off 30. A lot of rigmarole. Where did that come from out there? Maybe you've never used it before. But let's go check out the rigmarole inside of the stock market. Unfortunately, I wasted too much time. I didn't waste any time, but I spent too much time blabbering. And so when we get back from this break, that's when we'll take a look at the rigmarole of the markets. We'll go take a look at the Dow. We'll take a look at the NASDAQ Composite. We'll take a look at the New York Stock Exchange and really anything else that you'd like. You just got to reach out to us. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 28, S&P is down 9. So let's try to piece together what we should anticipate going on inside the market the rest of the day. And let's start by taking a look at one of your favorites in mine, light sweet crude. Let's look at the actual daily contract right now. We can see light sweet crude is trading to the downside. It is trading right now below its daily market profile low out here. And that's a brand new profile that formed yesterday. The bottom of that box, the low, is 38.14. Now, I don't know where how about that? I don't know where light sweet crude is going to close today. But here's the deal. If it does close below 38.14, I know I can get it out of my system out here. If it closes below 38.14, let me do another quick math out here, or 37.75. We'll call 37.75 is really the level of support. Now, where did it trade down to this morning? 37.71. Son of a gun. How about that? So what this says to that 37.75, and you're trading above it right now, it's a key level of support. It's hidden. You don't see it on this chart out here. But if it does close below, even though we've got the task market profile low, 37.75 is the number. That says that light sweet crude is going to continue to pull back. Now, where is it going to pull back to at this stage of the game? You know, you've got, let's see, the high of that session on January 28th was 37.52, just a few pennies, 20 cents or so below that the level that I gave you. I would say more likely than not, what we would see light sweet crude is make some type of retracement from the swing point off of February 11th. I got to actually make it a retracement versus an expansion out here, so give me a moment to do that. So again, we're coming off of the low from February 11th to the high out here on the trading day of March 11th. And that would say any close today below what did I say? 37.75, I believe was the number. We're probably looking at 36.73, maybe even 34.42. Now, if that's the case, if that truly is the case, directionally speaking, that does not bode well for the stock market out here. Likewise, if this 37.75 area holds, more specifically, even if it gets above 38.14, all the better, then just the sideways move is going on. Doesn't necessarily mean that it's going to move higher, but it says, okay, it doesn't really need to do anything more than continue to bounce around between where it's priced right now at about $41, and if it can break above $41, it's on its way to $42.50 or so out here. Now, why are we taking a look at this? Well, it's because I'll pull up my spreadsheet here, just so I have it correct out here. Just taking a look at the last 5 trading sessions, 1, 2, 3, 4, 5. So we're still at the 75% correlation, directional close correlation that exists between light sweet crude. If I go back 10 days says you're at 80%. So, you've got that correlation is still out there. Directionally, it worked yesterday as well. Added another one to the chalkboard out there. So light sweet crude has not failed just yet. And that's important to know. Why? Because of that directional correlation. So it's come down to support. So while that was coming down to support, let's go switch over now and take a look at the daily indices for the New York Stock Exchange, which had a nice gap down this morning. If you really look here, I'll blow this up on my chart. If you look at the let me just go ahead and turn those levels off. It'll be a little bit easier for you to see. Well, first, let me see if I can figure out where I put them. I was looking at the yellow line specifically, and it does not look like it's going to be, maybe it's right here. Where is it? Skip that. Okay, let's just skip that because they got too many other tools that are on there. So right here, what I'm looking at is this blue line, a blue little diagonal line. You can't see that. It's hard for me to see it. How can you see it? There we go. Okay. So now we've moved it up. So we're taking a look at the advanced decline oscillator here for the New York Stock Exchange, which is got a reading right now of about 47.35. Above zero says the bulls still have control. Now, what was needed today, or what is needed by the end of the day, is 2,613 net declining issues in order for the bears to actually firmly take control of the market out here. Now, I believe that's only about 1,000 or more issues from where we're trading right now. Let's see. So net declining issues today, 1632. You need 2613. So a little bit less than 1,000 issues to the downside. And, it doesn't look necessarily that bad. The New York Stock Exchange, price-wise, damage-wise, New York Stock Exchange is down, NYSE about 0.8%. So it's the leader to the down. Now the Russell's down about 1 0.3% out there. But back here at the ranch, still in control. The bulls are still the ones in control of the New York Stock Exchange. I'll go ahead and readjust that later. The NASDAQ composite is also moving towards zero. It's reading 46.89. The NASDAQ composite, let me try my other spreadsheet. The NASDAQ composite needed minus 2007, net decline in issues of 2007. If it gets below zero, then you're taking a look at, okay, the sellers have the opportunity to exert control inside the market. Stays above zero, not necessarily the case. Now, the Dow here, you can see the reading is just slightly positive, 0.06 out. Basically, needs probably one more declining issue in order to get down to zero or just slightly below it. But until it does that, it is still the bulls that are in control of the market. So really depends upon the close. That's why we were looking at oil. What was oil doing? Was oil busting through support? And if it was going to say, pretty good chance that we're going to see a poor close here. The markets will move lower. It'll actually give you a nice subtle message of a sell signal out here. We don't have that right now at 124. When I take a look at light sweet crude, I know that it's down to support. Whether it breaks that level or not, I don't know. But I can say that as a 124, it has just simply come down to a natural level of support. And if it continues to trade above that, then everything is okay. Okay, so now we go from the daily chart out here, and we're going to switch over to the intraday time period because we've seen a lot of chop out here. And the chop is present when we take a look at the 30-minute charts out here. So let's take a look at what the markets have actually done this morning. The Dow, let's take a look at the Dow specifically. The Dow here, we know that the price oscillated right down around the zero line. That's the price oscillated with the advanced decline. What did see when we take a look at the Dow out here, really great signals, right? Really great signals on the 30-minute time frame with regard to what's going on in the overall market. When the Dow made its most recent high, this was at 3:30 yesterday afternoon, as the Dow futures I'm referring to, got up to a price point of the high there was 17,183. Gets up to 17,183. What happens in the ensuing half hour? Boom. Kind of gets crushed. Now, when I say crushed, we're just really referring to the candle that's out here. Big old bearish engulfing style candle that is out here inside the futures contract. Price gets right back inside the range of its TAS market profile. Price continues to move lower overnight. What does it do overnight, and what does it do into the time frame here of 10 o'clock this morning? Well, at 10 o'clock this morning, moves lower. Same pattern that called the top. Guess what it did this morning? It called the bottom. Called the bottom. You've got 7 waves to the downside. You've got a price relative strength divergent. You've a pattern out here, and you've got a big old key reversal session. So not just was it a bullish reversal signal as we take a look at Japanese candlestick charting, it was also with regard to the Eastern and Western signals out here. Nice, good old key reversal session. Market was extended, and we know it was extended because we take a look at that price relative strength divergent pattern. So this is suggesting to us that, hey, you got a nice potential bounce. Now, that was up until about 12:30, half an hour before we came on the show. And I've got to update this, just make sure. Let's go. That is a wide market profile out here. Wide. Let's confirm that that's the correct profile. Switch over to my other system. Then we get back from this break. Let's continue looking at the 30-minute chart for the Dow futures contract. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off about 7. S&P's down about the same. So we're looking at the Dow futures on the 30-minute chart out here. And one of the things that we noticed, so it gave us nice, as it did yesterday, it gave you a nice little topping signal. This morning gave you a nice little bottoming signal. To get 30-minute charts out here, I think prior to the Fed release of the Fed announcement release out here, expect the markets to really travel with inside the range. The 30-minute charts out here have really provided you with a lot of great information with regard to the range, let alone great patterns out here. We can see them working on the 30-minute charts. They work on the daily, on the weekly, on the monthly, on the you-know-what out there, every time frame. So it's one of those patterns you just absolutely must be paying attention to out here. That is the correct market profile, wide profile out here. But right now we can see the Dow is taking out that resistance level out here. We can see the point of control, little POC, little blue lines out here, closer to the red lines. If, in fact, we see in this 30-minute time frame, which just began right now, we're at 131. But any close above 17, 131 would be very positive, as resistance on the 30-minute time frame will have failed out there. In fact, the Dow just turned slightly positive out here. Now, is the market going to run away to the upside? No. That's not what we're saying out here. Not at least at this. I don't believe that that's what we would anticipate for the day. But let's switch over now. Let's go from 30-minute time frame charts, because, by the way, the patterns are the exact same inside the ES Mini this morning, and where else? I think inside the ES Mini was it? I don't know. It wasn't inside the NQ, but it was inside the ES Mini. Let's take a look at. Let's go up one more time frame. Let's go to the 120-minute time frame chart. So where's the next level of resistance? Okay, inside the Dow, bottom right. Shoot, it's really above that level. So there's no resistance on 120-minute time frame. So it's not going to be about the Dow as to where the market necessarily moves to. It's going to be more likely about the NQ and the ES, the two charts on my screen to the upside out here on the upper half. You can see that the NQ on the 2-hour chart is trading right at that point of control, which is right in between the resistance and the support level out there. So there is just simply no real control of this box. That says price could move up to the top, but in order to do that, you got to see it clear 43.55. Then you're trading at 43.55 right now. By continuing to move higher out here, and the Dow is saying, hey, I'm going higher, so you, ES Mini, you come along with me. And of course, since you already set up that same pattern earlier this morning, you're entitled to come with me. You got your stamp. You got your card stamped out there. So you're ready to move higher. That says that the ES Mini ought to move up to the price level of where are we? Oh, I was looking at the NQ. What the heck? I'm looking at the ES Mini out here. It is actually right up against resistance. So if it can clear the level of 2003, we'll call it 203.50, which is exactly where you're trading right now, then it is free to run up to the upside, and then it's back in the court inside the NQ. It was the NQ that I was looking at that was trading right now. You probably knew that because I must have given you a price of 43.55, and somebody had to hit themselves upside the head with a 2x4 to say, hey, what the heck are you talking about out there? I think it was you hitting me with the 2x4 to find that gift in every set of circumstance. Well, the circumstance out here as the ES Mini looks like the Dow, they want to continue to run higher. The where that's going to probably start to fizzle out is if when the NQ gets up to this 43.70 level. Another 15 points to the upside. So right now, it's all about, I'd say it's all about the NQ, because the other guys have basically said, yeah, I can get above these resistance levels. Will the NQ do that? If I look at the 5-hour time frame chart out here, NQ is above resistance, no reason for it to not run back up to the highs. ES Mini is above resistance. Dow is above resistance. Everything is pointing to nice trading ranges, Nice trading ranges. Just pay attention to the 30-minute time frame to give you gauges of where the markets will go ahead and reverse out there. So hopefully that assists you with regard to what the markets are doing and what they're not doing. So we took a look at light sweet crude. No reason for me to really discuss gold, right? You guys know exactly how I feel about that. And it's headed lower. Just in case you didn't know what I was, what my feelings were, my expressed feelings. Is gold going to go down and test the 1218 level? Yes. Is that going to hold its support? No. Is gold going to go down and hit the 1203 level? Yes. Is that going to hold its support? No. Is gold going to go down and get to 1162? Yes. Is it going to hold that level of support? Maybe. That may be the level to be watching out. But gold, and it's not going to do it in one straight shot, although gold can do it in one straight shot. As I always say, it doesn't matter to me which side of the trade you're on. Just make sure you're using stops out there, because it is not looking good here, and it's going to trap. The problem, really, the real problem with gold is once it gets below the low on February 11th, and that is at 1196. Will it do it? Yes. It will absolutely do it. And when it gets below that level, just take a look at this here. You want to talk about, and we went through it, you and I. The cool thing is both you and I did this. We went through it to try to figure out who was buying up here. Where was all this distribution taking place? And we saw it was the small, what they refer to as non-reportable traders out here. Take a look at this. From the trading session of February 12th through today, you've got, 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22 sessions out there. You talk about folks getting trapped, and the folks that are getting trapped are the small traders out there. It was not the big money that was buying up at these highs. Big monies are saying that maybe after we trap you guys out here, and you'll go ahead and sell, and we'll go ahead and be the buyers out there. You know, that's that trading places game over and over and over again, and it could not be happening any more than here inside the gold complex. Now, what I'm giving you is nothing to do with intraday trading out there, but I would anticipate that that is what's going to take place. And once you see it get below this that trading session from February 11th, look, there's already people that know that they're on the wrong side of the trade out here, right? If you just take a look at a simple trend line, and this is, I think, what started some of the selling last night out here. Let me just see. You know, the trend line, it's, you know, it's been on such a nice run to the upside, right? You know, so where we want to start that trend from right here on January 14th, I mean, that would be okay. You know, there's a trend. Okay, maybe we'll put the trend right here if you want to. That's fine. You can say, all right, it's just coming down to the trend. So when it gets down below there, expect that avalanche to occur out here. But it's out of my control. It's going to happen out here. So that's my opinion with regard. That's not my opinion. It is what the chart patterns are saying to Steve-O out here with regard to Goldilocks. And by the way, I won't be able to give you an update on it tomorrow or Thursday or Friday. I won't be with you out there. So you're just going to have to navigate those waters on your own. Do I expect it to be one? No, it could be the Fed. It really could be the anticipation. The smart money, the big money, knows really what the Fed is going to do, which whatever they come out with, it's just simply going to go ahead and impact gold to the downside. That is a real possibility out here. It doesn't have to be that, but that is a real possibility inside of the markets. Again, no matter which side of the trade you're on, just simply go ahead and use stops out here. We got the Dow. She is off 6 points. Ooh, the S&P just flashed 666. That's an ominous sign. Down $6.73 right now. NASDAQ Composite down 21. The Russell 2000 off 13. So when we get back from this next breakout here, if you haven't put something in the den or you haven't sent me an email as to something to take a look at, we'll go take a look at. I'll find something to take a look at that will be important for you and I. This is Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off about 9, S&P down 7. Hey, I did find the chart that is muy importante, the most important chart for you and I to be paying attention to, at least at this moment. And it's a chart that I said a few days ago, I don't really look at it too often. Well, I did look at it just a few minutes ago, and that is the chart for Apple. The sleeping giant appears to have awoken. Is awoken even a word? I doubt it out there, but I'm going with it because it woke up. If we take a look at the swing point that has been taken out, and it does appear that it's being taken out with volume. Now, I don't know how this is going to trade for the next couple of hours out here, but if I just use straight line math, you've done 28 million shares. 28 million divided by 4 times 6.5 gives us what, Johnny? 40 million shares. 40, I'm sorry, is it 40? Hold on. I might have messed up in my head out there. Is it 40? Gives us 40. Oh, maybe it's not with volume. Because you've got 46 million shares at this swing point. Nonetheless, the swing is being taken out. Maybe with volume, maybe later volume. The swing point that we're taking a look at is the high from the trading session of March the 4th, and that's out at 103.75. There could be an A to B equals CD to the upside unfolding inside of Apple. Let's use the conservative one, conservative A to B equals CD, and use the swing point from February 24th as our A point, B point out here on March the 4th, and the C point on March the 10th. That would say you got to run to 110 to maybe 113. Why are we taking a look at Apple? It's an excellent question out there. We're looking at Apple because it's part of the NDX 100, and what the NDX 100 did yesterday is it made a nice seventh wave move to the upside out there. Where'd that chart come from? Interesting. Hadn't seen that chart in like forever. But it made a seventh wave move. That says if Apple's going to move higher, the NDX has really only one option. Yeah, it has more than one option, but the likely option is that 2 will go ahead and run higher. Now, if it doesn't do that today, does it tomorrow, it's bullish. It's short-term bullish for the NDX, and the markets are not going to turn to the downside without the NDX participating. But let's go find out what our man Tom in Plymouth, Massachusetts has to say about that. Tom, thanks for calling. Thanks for holding. How are you doing today?
I'm doing very well, Steve. How about yourself?
I'm doing well. Thanks so much for asking. So you're trading the dust. That is the ETF. That is the 3-time bear position of the gold miners out there, I believe. Is that correct?
Yeah, I'm looking for an entry point, actually. I haven't gotten into it yet, but I just was listening to you, and I think gold is going down before it goes up again, too.
So if we take a look now, you're a shorter term trader out here. So the entry point, let me try to do this. Let me get rid of our weekly profiles out here. And so the entry point was really a couple of days ago, March the 11th, down at about the 331 level. And you're trading right now at 393. Now, will it get back down to that area? I don't know. So on a daily chart, I would say the first entry point that shows up, we'll call it that point of control 368, and you're 392. Now let's go switch down and take a look at a 30-minute chart. Let's go see if we can figure out anything here when we take a look at dust. And as we turn this over into the 30-minute time frame, what we're going to go ahead and look at here, Tom, is to see what its market profiles are doing. Okay, so it looks like you may get a chance out here because prices just closed below, and this was at about 12:30. It just closed below the low of its most recent market profile, which suggests that this thing could pull back further. So the price where this would pull back to that sticks out to me is the trading time frame from 9:30 yesterday morning. And it's trading right into that level as we speak right now. Now, that had volume on that 30-minute bar of 11 million shares, and you're pulling back into it right now you did that with 3.7 million shares. So to answer your question on a short-term basis, about now might be that time frame. If I were sitting next to you and trading, I would go down to a 10-minute chart out here and try to figure out what's going on a 10-minute time frame to see if we can figure this out. And on a 10-minute time frame, this would say anywhere between now and let me do this. Give me one more moment. Let me switch over and turn on these profiles. Let's change it from 240 to 10 minutes out here. See what we've got on a 10-minute. That's not giving me any more information than that. So, you like to, are you going to hold this overnight?
I probably will hold it overnight, but I don't know how long. It won't be too long. I might scale into it a little bit, maybe take a third of the position, and we'll see if it does anything this afternoon, and if it goes down a little bit more, maybe get it a little bit more.
Yeah, I wish that I could. What I was looking for was just simply to try to find a level of support on an intraday time frame for you out here, and there's really not. The only support that we can take a look at is, some of these 10 or 30-minute volume bars, and unfortunately, that range is pretty large because it's from as high as about 379 to as low as the 340 level out there. So that would be the range that I would be taking a look at as far as scaling in. I wish I could identify some other level of support for you.
Oh, that's good. Thank you very much. I appreciate that.
You betcha. My pleasure. That was Tom in Plymouth, Mass, and we were taking a look at DUST out here. Okay, so we were taking a look at the NDX 100 and Apple out here. Now, Apple is, let's go to actually find out what the current weighting structure is inside of the NDX 100 by looking at the QQQ ETF out here. So let's go see. So Apple 11.3%. Microsoft is the next largest weighting in the NDX, and Amazon, and then Google. So let's go see what Microsoft is doing. Let me get this back here to a daily time frame. So you got Microsoft and Amazon. Let's go see what Microsoft is doing. But Apple right now, trying to really break above a swing point. Well, it's breaking above the swing point. That's clear. Whether it's a confirmed A to B equals C to the upside doesn't mean that it can't still form one. But we haven't seen that kind of action out of Apple. Something has really awoken. I don't know what it was that woke it up, but nonetheless, it has awoken. Again, probably will get lots of cards and letters because it doesn't even sound like that is a word that would be put inside Webster's dictionary, more so like the dictionary that Steve uses out here. Okay, if we take a look at Microsoft, this is a little bit positive. It's trading right now above its daily market profile. That should have been resistance. POC closer to that top of that bracket up there. Speaking of brackets, do you have your bracket in? Trying to figure out who it is that's going to be my top 4 teams out here. I've got 3 of the 4. 3 of the 4 are pretty much, you didn't need to be a rocket scientist or a technician to figure out. 3 of my 4, I've got the University of North Carolina playing Michigan State. I figure that's the finals. But I've got Kansas in that set as well. Now I'm trying to figure out, is it Oklahoma? Is it Oregon? Is it Texas A&M even? My upset is in that bracket. And because Oregon is playing in Spokane, maybe I'm giving it too much credit out here, but I'm thinking that maybe Oregon can be, and that's not so much of an upset team. They've got a pretty high seed, I think. Maybe that's a team that kind of sneaks on through out here. But I'd be happy to take your advice because I'm good at college football. Sort of suck at which is a technical expression for picking the top 4 teams inside of March Madness out here. Not as good inside the Sweet 64 basketball brackets out there. In the event, Microsoft is above resistance. You get above resistance on a daily basis. Hey, you go up to the next level. So Microsoft looks like it wants to trade up to 54.98. That's the top. That's the 21% of the weighting structure inside of the Qs. It does not look to me like that 7th wave is really going to do anything other than wave goodbye as wave number 8 passes it. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 7, S&P is down 7, NASDAQ composite off 21 points. Question in the den is if I have an intermediate term view on IWM. Is that correct? I think that is the question that is out there. I believe that's the question. And let me answer it this way, because I don't really think that I do have an intermediate term view, because I'm not getting great signals from it when I take a look at the futures contracts for the Russell 2000. And where I do have what I think are really good signals here with regard to what the market at least wants to do, let's say between now and tomorrow at about 2 o'clock. And that's this. We talked about these patterns here, these ranges that we're trading within, the tops and the bottoms that are forming out here. And the NQ formed a real nice top yesterday, and this was going into the close, a price relative strength divergent pattern. You can see it here, but it only made 4 waves to the downside, whereas the Dow made, 7, a little bit more so inside the ES Mini, and both of those made nice bottoming patterns. And with the what looks like Apple ready to move higher, Microsoft moving higher, the IWM is not going to drag the markets lower, but it looks like everything else, at least for the time being, the rest of the day, want to move higher. Hey, let's go out to California and speak with Brent. Brent, thanks for calling. Thanks for holding. How you doing this afternoon?
Doing great, Steve. Thanks for taking the call.
My pleasure. So Antero Resources is the equity that you're calling about, and I know that everybody listening in wants to hear what Brent is doing. So give us that info.
I was doing a search just because it looked like natural gas was potentially coming off the bottom.
It sure looks that way.
I found this company. They seem like a very solid company, and it just so happened when I was doing the search, it looks like it had completed a pattern and was doing a 618 retracement, and the test of that 618 retracement is where I bought it at 22. So, and it looks like we're in a little congestion area here that's trying to get above. Just wanted your opinion, please.
So the place where you bought it at, the 0.618 retracement, happens to also go ahead and converge with the bottom of its TAS daily profile. Now, the benefit that you had there, let me turn this off on my chart. We're going to turn off the weekly profiles and take a look at the daily. And so the daily profiles, and they formed right at about 22.19, so very close, it sounds like, to your entry price out here. And because that point of control closer to the bottom of that box out there was giving us a fairly good indication it should at least go test the high. The high of that box or resistance is about 24.43. If it can clear that level, and right now you're dealing with the last time it was up here was on March 4th, 6.7 million shares, so you're really light today, 1.1 million shares out here. You're exactly right with regard to this being a congestion area. I would say that 2369 is really a 2365, 2364 is a real key level. You're at 2396 right now. If it closes below those levels, expect it to go back down and test the bottom. So if it can clear 2443, and as you said, that's a pretty decent congestion area, then what you're looking at, if we take a look at just some other levels of horizontal potential resistance, your next level out here, Brent's going to be 2520. If it can clear that, it's going to move up to the 2785 level. So that's the best that I've got with the few moments that we had, because the show is over. But I hope that assists you.
It did very much so, Steve. Have a great day, and I'll talk to you soon, okay?
That sounds great. Thanks so much for calling. That was Brenton Martinez. Folks, stay tuned. David White is up next. Again, I won't be broadcasting with you tomorrow, Wednesday. Tomorrow is Wednesday, Thursday or Friday, but we'll be back in the saddle again, all nice and rested, come Monday. So have a great afternoon, and I'll see you next week. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.